The process of spreading risk is at the heart of the insurance industry, says Jerry Sullivan, head of the Sullivan Group. In this interview with Insurance Journal's Charles Boyle, Sullivan explains how reinsurance operates and why it is such an essential component of the insurance industry.
We've been talking basically about the insured and their risks. Eventually this gets into the realm of reinsurance. And I know the Sullivan Group is also a reinsurance broker. Could you maybe explain a bit how that aspect of the business works?
Well, basically, reinsurance is simply insurance of insurance companies. We do for our new employees, we set out a training device that we call circles and squares. And all circles and squares is a way of describing the structure of the property casualty industry. And it starts out on the one hand with an insured who are the ones that generate risk. They go to an intermediary, an agent or broker, who in turn goes to one or several of the insurers that he deals with to place that risk. If he can't find markets that he deals with that are willing to write that risk, he in turn may go to a specialist broker, a wholesaler, of which we have several firms that do that in different areas of the business, who in turn will access other insurers who may very well be willing to write that risk. But the risk gets, in one way or the other, to an insurance company. The insurance company, in turn, may choose not to keep the risk. Let's say the building that we're in at the moment, I have no idea what the value is, but let's assume it's $20 million. The total insured value. Well, the insurer may choose not to keep all of that themselves. So they in turn would go to an intermediary, reinsurance broker, who will go to companies that specialize in writing those kinds of risks. And maybe the insurance company for that $20 million building is willing to keep the first $2 million of any loss. And then they go to various reinsurers to write the other $8 million. To write a layer of $8 million excess of $2 million. And it may be one reinsurer, it may be several. But essentially, that's the process of how we spread risk, which is the heart of our business. And it may be spread to other companies, to reinsurers who are domiciled here in the United States. It may be spread to other carriers, other reinsurers domiciled outside the country. As a matter of fact, a majority of the reinsurance placed by U.S. domiciled insurance companies, the majority of that business is placed with reinsurers outside the country. And if you look at major losses like Katrina, major earthquakes and this sort of thing, very often a majority of those, or certainly a large portion of those, are paid by non-U.S. reinsurers. But many people don't see it because they see their own insurance company who's paying the losses, but in turn is being supported by their reinsurance. And that's essentially what reinsurance does.